Yeah, morning trades. A huge day coming through across markets, huge percentage changes playing across markets. Yeah, multi-sigma moves. It's been kind of a buy everything sort of day except the US dollar and Bitcoin. But that US CPI number really resonating, and the headline came in at 0.004 of 1%. We saw the core number coming in at 0.23 of 1%. That took the annualized rate to 4%. Now, that was obviously below market expectations in terms of where the analysts were positioned, also CPI fixings, but also, more importantly, I think where the market was positioned. One could argue that the market was positioned for a CPI print month on month on core at 0.35 of 1%, maybe even 0.4. But you can go into the components. Yeah, we saw rents up a little bit, and a lot of it was what we saw was dragged down by hotel prices, for example, which may not be repeated going forward. But owner equivalent rents were lower. We saw core services ex-housing coming in at 0.022, which was a big markdown from 0.61 in the prior read. And generally speaking, the market has taken the pressure valve off. And you go into the rates market, certainly for starters, we've got nothing now being priced for the December meeting, nothing being priced for January meeting. We've got a full rate cut almost being priced for May now. We've added about 12 basis points of cuts for June, so we've now got 1.5 rate cuts being priced in. You can see two-year government bonds dropping from around 502 to where we're currently sitting at the moment, just before we're going into the close, of 481. So the net change is a huge move there. We've seen good buying in the back end of the curve, but it's been less prolific, and therefore we've seen this big bull steepening between 2s30s, 5s30s. We've seen that playing through quite rapidly. Now, break-evens have come in a little bit, but real rates, we've seen real rates on 5s down about 19 basis points as I speak. So that's really resonated across markets. If we have a look at the US dollar, which has really followed what we've been seeing in that rate contract complex, EM currencies have really rallied hard. I mean, the Chilean peso is up over 3%, as you see here. The South African rand's gone for it in G10. You've got the Stocky, the New Zealand dollar, all having sort of gains of 2%. Now, that Aussie is really interesting. We're coming back into that horizontal resistance levels of 65.20. We do have the wage price index coming through today in Australia. The market's looking for 1.3% quarter on quarter, and that takes it to a 3.9% annualized rate as well. So if we get a big number there, if we get a full handle on that year-on-year clip in wages, we could be seeing the Aussie dollar breaking through those resistance levels. Go into the equity market, it's green on screen. It's a kind of buy everything day today. Shorts have covered dramatically. The short baskets, short interest baskets are up about 6% or so. You've got the S&P, NASDAQ all sort of looking 2% higher. As I speak at the moment, we've got 93% of stocks in the S&P higher on the day. The NASDAQ looks like it wants to go and take out those all-time highs that we saw recently as well. REITs, discretionaries, all putting in points. All sectors are looking pretty good at the moment. The KRE on the regional bank index is up over 7%. That's a massive move there. And home builders naturally rejoicing in what we've been seeing here, and that's up in terms of the XHB, about 6% as well. Now, in commodity markets, gold's pulling on about $16. Not a staggering move considering the extent of the dollar sell-off that we've been seeing and the move in real rates, but we're up $16. Crude's having a bit of a flat move. Now, I think it's interesting, if we look ahead, we are expecting Asia to really fire up. I think China's definitely one you want to keep an eye on today. We've got industrial production, fixed asset investment, and retail sales. That retail sales number expected to push up about 7%. But this comes at a time when we're getting new news and new headlines about further stimulus to try and help the property space, giving low-cost funding playing through about 137 billion. Again, that's something that's going to put wind to the back. So we're expecting China and certainly the Hang Seng to really fire up there. Elsewhere, we talked about the idea about what's happening in the wage price index in Australia, so watch that Aussie dollar exposure. And in the US, we turn to the retail sales numbers ahead. The market's looking for the advance rate to drop 30 basis points, weighed by new car sales and gasoline. And also the PPI numbers, which again, if you put into this context of CPI, should solidify expectations for the core PCE number that comes out later. So, it's something we are watching. But generally speaking, the market is really rejoiced in what we're seeing in this rates complex today, and the Fed have less work to do here.